When does it end? When does the capital loss end for bonds?
I think when they've sold off enough. And I'm not sure they have yet. So the real thing is that we're really playing a game where the market desperately wants the Fed to react the way it's done over the last few decades, but certainly most recently in 2018. The market behaves this way. Historically, the Fed has turned around and soothed it by delivering more liquidity, less tightening, something along those lines. I just don't think that they can. And so when does the pain stop? I think that yields still do need to go up a bit more, quite a bit more actually. And I think that the volatility will continue until the Fed actually can convince markets that it's going to do what it says it's going to do, which is to raise rates.
Sonal, I've had the pleasure of following the evolution of your thinking through 2022, and you and I have caught up a few times.
Yeah.
I think what stands out for me about the way you think about this year is that inflation's just going to be so much stickier than so many people expect, and that Fed funds is going to peak at a much higher rate. Sonal, could you give us your latest thinking on that, just on where you think inflation's going to be, say, year-end, and how much work this Fed still has to do?
So here's the thing. I think the big divide amongst most of us in the market right now, and certainly amongst most economists, is the extent to which you believe this is all supply-side driven, petrol-driven, so the Russia-Ukraine war, COVID-related supply chains, etc. And those of us who actually believe that the fiscal impulse was large and it had an important impact, and that's what's showing up in labor markets, that's what's showing up in people's spending. Keeping in mind that the inflation we've had so far effectively knocks off 1 month's wage from the average American, it is remarkable how well consumers have held up. They've held up because they've got a lot of resources still, or sufficient resources to ride out inflation for a while longer. So the normal thing of the economy slowing down sufficiently to curb inflation, it's just not happening yet. So in terms of where I see year end, the last time we spoke, I said that we could even get a negative number in July. In the end, we got a flat number on the back of gas prices. I think we could easily see that again. But then again, you see what happened in retail sales. Ex-gasoline, if you look at the control group, retail sales were up a lot. They were up over 8%. So I still see a relatively strong consumer. For year end, I see inflation closer to 8 than 6, which is what most in the market are expecting, because I do see a lot of stickiness in shelter, in a lot of other areas. Sorry, and just to finish off on the issue of gas prices here in the US, at the end of August, the strategic reserve sales actually end. And I am curious what we see in an ongoing way, a continuation of a decline in gas prices or not.
Sonal, one reason why some people say that the market has rallied so much is because Jay Powell didn't push against the rally that they had been seeing, that they didn't seem to be that concerned about a loosening effectively in financial conditions, both on the bond side as well as the equity side. Do you expect that message to change at Jackson Hole?
I'm really curious. Jay Powell has, over the last several meetings, managed to soothe the market perhaps more than is ideal, because clearly the Fed needs financial conditions to tighten a bit. They raise rates as much as they raise them, you get this massive rally in markets, and suddenly financial conditions are looser again, and you're not going to get the cooling that you need. The idea of bringing inflation down consistently, so not just 1 month, 2 months, but consistently back towards their target, is going to require some slowdown, a genuine slowdown, and a cooling off of the labor market, of the economy more broadly. So far, Jay Powell has managed actually always to soothe the market, or the market tries to cherry pick the more comforting sound bites. So that was the lot that he didn't expect many supersized rate hikes. So it just means that you're going to see more rate hikes for longer. The Fed is guiding us towards 3.8, close to 4%. I think they probably need to do at least 4%, a bit more than 4%, not this year, but I see hikes into next year. And there continue to be rate cuts priced extremely quickly. And that's the area where I think I'm most out of step currently with market pricing. I just don't see the rate cuts. Do we end at 375? Do we end at 425? That's the smaller question relative to when and how quickly does the Fed start cutting.
I agree.
again.
Raise and hold seems to be the strategy.
Yeah,
Mary Daly's talking
it
about
has to be.